When we applied to Sandbox, we pretty much had nothing other than an idea and a disproportionate amount of belief in our own capabilities. It felt a little bit like, is this like going back to university, or is it like going back to school? This was completely unknown. Everything that we perhaps expected on a negative side of things was completely blown out of the water in probably the first 5 minutes with the quick introduction. I forget what it's called now.
The Pechakucha.
Yeah, we were able to be challenged on our storytelling, our narrative, but I do think that's something that a lot of founders fail to recognize. They have to be the ones to impress the other side of the table, as opposed to building a genuine relationship based on mutual trust, mutual respect, and mutual ambition. Right? You also want investors that back the ambition that you have, not play it too safe.
Early stage, it's still quite scrappy, not just with Tribe, but with many startups.
Yeah.
We recognize that.
Yeah, my view is if you left Sandbox with or without investment, the value that you left with in terms of your data room, your assumptions or hypotheses being challenged, your product being reviewed, your marketing being reviewed, you can't leave with less than what you entered with. And if you did, then you're going to fail.
We didn't have 100% conviction in Tribe. I don't think we've ever had a 100% conviction in any startup we've invested in. But we had enough conviction to warrant, let's get in early and see how this unfolds. You knew your strengths, you knew your weaknesses, you knew your gaps, you had a plan.
We often get challenged, and we obviously got challenged. You're going to deal with competition. Is that we're going to tackle them head on? And we have a huge amount of respect for them, but that doesn't mean we stop doing what we're doing or we stop in our own tracks because there's other competitors out there. And like you said, they've done a great job of paving the way. We're just now going to run our own race. We're going to continue punching above our weight for as long as we can. Welcome to Block by Block. On today's episode, we're talking about capital and conviction for early stage startups like Tribe. Today, I'm really pleased to have Elliott Denham join me from Oraseya Capital. Elliott is the head of programs, and he spearheads the Sandbox program. We will dive into how Tribe got into the program, what the views of the team were through the process, and how we ended up getting capital at such an early stage, despite not having revenue, despite not having our license. Raising capital in Dubai is a challenge. I've made a point of this a number of times. If any founders think it's easy, we're here to dispel that myth. I hope you enjoyed that episode. Okay, so Elliott's with me. Welcome, Elliott. Thank you for joining me.
Pleasure.
For those that don't know Elliott, as I mentioned, he's the head of programs at Oraseya Capital. And for those that don't know Oraseya Capital, maybe Elliott, you could give us a quick overview of your role, yourself, and Oraseya Capital.
Sure. Thanks very much for having me. So Oraseya Capital, we're a $150 million VC fund based out of Dubai. We're the VC arm of DIEZ, Dubai Integrated Economic Zone. We are an investor investing from pre-seed all the way to Series B. We invest in sector agnostic technology startups that have a clear relevance and nexus to the UAE. I'm very pleased to share that we're recognized as one of the most broad institutional investors in the UAE, but also the number one most active investors in the UAE. In 2024, we deployed into 24 deals. In 2025, we deployed into 25 deals.
Nice.
And the momentum continues to build into 2026.
Awesome. So let's see, hopefully at least 26 deals. Are you following the years? 24 and 24, 25 and 25?
Who knows? Maybe we're a fundamentalist investor. If the opportunity presents itself, why not?
Awesome. So as I mentioned in the intro, Tribe is a proud graduate of the Sandbox program. Tell me a little bit about Sandbox. You head that up, right?
I do, yeah. So as head of programs at Oraseya Capital, I'm responsible for leading the pre-seed and seed investments. And the way that we conduct our due diligence, essentially, internally at pre-seed and seed stage is in a programmatic fashion. So Sandbox is really a due diligence process. It's an investment process. So rather than us investing or evaluating startups one by one, 365 days a year, we identify the best startups we can find. We batch them into a cohort, roughly 20 startups per cohort, always quality over quantity. And then over about an 8-week period, we conduct lots of sessions and guests and workshops to get to know the teams, the habits, the discipline, the coachability, the forthcomingness, their transparency and their trust, and for them to get to know us. We also evaluate their legals, their finances, their tech, their product, their commercials, and so on. And that all concludes after 8 weeks into a pitch to our investment committee at Oraseya Capital. Should the startup pass the investment committee, then they move into that second phase, which is where they become part of our portfolio at Oraseya Capital, and they receive the funds, the access, the exposure, connections to experts working in and on their business. If they need an accountant for 2 hours, a growth marketing specialist for 5 hours, a lawyer for 4 hours, we pay for those professionals to work in and on the startup. And the benefit really is that we run 2 cohorts a year, one in February typically and one in September typically. So if a startup joins and then receives access and funding, then they're able to access and avail the support cohort after cohort after cohort, for the tenure of the relationship, which could be 7 to 10 years.
Hopefully so. So before we go any further, if you are a pre-seed or a seed stage startup, typically based in the UAE, but doesn't have to be, but with a close association or link, nexus is the word that you guys use, which I like. Then how does a startup apply?
They can apply via sandboxaccelerator.com. And as I said, essentially Sandbox serves as the gateway into Oraseya Capital. What is exciting for a pre-seed or seed startup is that our check sizes start from $150,000, but could go all the way up to $3 million at Series B. And for founders at the early stages in particular, and I'm sure we'll talk about this, a benefit of considering Oraseya Capital, joining one's cap table, is the fact that we can follow on. So our first check is often not our last check.
Okay. I've already referred a few people. I truly believe in the program. And I think one of the nice things about Oraseya, actually the best thing about Oraseya is the people, but the really nice thing about the people is that you make yourself available. So you'd have, a whole bunch of open, events and pitch days, and you host events as well. And then there was the Founders Summit during Doers Summit. So yeah, I think, you make yourself really accessible, which is quite unique. It's almost the opposite way around to, how it's typically been done. Certainly here in Dubai.
I appreciate that. And, at the end of the day, 2 things I'd say there. One, we didn't become the most active investor in the UAE overnight by chance. It was very meticulous planning and execution. But number 2, if we can see in startups level up, even if we don't invest, even if a startup learns about the world of VC from Oraseya Capital and determines, actually, I'm not applicable or keen to fundraise from Oraseya Capital or from any other VC, then we're seeing the overall quality of candidates and startups and founders increase in caliber, and that's why we do that.
Makes sense. Okay, let's start with an easy one then. Obviously, Tribe applied to the Sandbox Cohort 7. We applied back in, I guess it would have been June or July 2025 for the September start date. Now, for context, for those that are watching or listening, Tribe only incorporated in June. We submitted our initial disclosure questionnaire to VARA in July, and we got our approval to incorporate in August. Meaning, when we applied to Sandbox, we pretty much had nothing other than an idea and a disproportionate amount of belief in our own capabilities based on where we were at.
Sure.
So what caught your attention about Tribe based on the limited amount of data, traction, metrics, information that we were able to give?
Ultimately, from a macro perspective, if we look at the asset class of property, it's proven over hundreds of years, if not millennia, that it's a lucrative asset class that is fairly stable and predictable around the world. But increasingly, also around the world in today's era, it becomes increasingly inaccessible to the masses. And so with that in mind, you've got this demand, this pent-up demand for an asset that perhaps people can't afford. And so Tribe's model of fractionalizing and tokenizing, access to said asset is very appealing. Equally, whilst the traction was limited and Tribe's
limited,
Tribe's progress
understatement so far
was in its infancy, you joked about it earlier, but that deep belief and vision of what you were doing and the conviction that not only you were doing it, but you're going to win it, played a very contributing factor to at least pique our interest. Since then, I guess we'll get into it, but since then, that initial impression has only been cemented.
Well, thank you. I guess let's just stay there a little bit. The concept of, an Oraseya portfolio company tokenizing, fractionalizing real estate, piqued your interest. What were the connections or, I guess, convictions you had at such an early stage that made it worth, investing more time, accepting us into the program, a very competitive program, nonetheless.
Yeah, absolutely.
You mentioned Diaz, was it the association to such a big ecosystem? Was it the belief in Web3 blockchain? What were the kind of the early signals that maybe you had internally versus what we had and were able to provide externally?
So I would say number one would be the macro tailwinds. It's a growing market. Number two, the timing is particularly relevant because there's more and more people, particularly in this region or in this country, who want to have access to property as an asset class, but perhaps can't. Number three, the regulatory tailwinds. It's from top down. There's a lot of innovation happening at the city level, and we'll talk about that separately, I'm sure. And you're tapping into that tailwind. But number four, and arguably most important, is the fact that you guys are not first-time founders. You're not necessarily solo founders. And I do want to caveat that first-time founders and solo founders, and we have invested in them, can make excellent entrepreneurs. Had such strong market founder fit, which is refreshing, and had such a clear vision on how you would do what you've done or what you intend to do and the journey you're on. Had Tribe been the first property tokenization startup in the city, maybe it would, you've really got to knock down a lot of barriers in that capacity. But since the precedent had already been set by one or two other companies, it meant that you didn't quite have a red carpet rolled out for you, but you had a little bit of a precedent which you could lean onto. And so if I was to summarize 4 high-level things, it would probably be those.
Yeah, no, I think it's a good point as well. We often get challenged, and we obviously got challenged during the first phase of cohort 7 on competition. How are you going to deal with competition? Is that we're going to tackle them head on, and we have a huge amount of respect for them, but that doesn't mean we stop doing what we're doing or we stop our own in our own tracks because there's other competitors out there. And like you said, they've done a great job of paving the way. We're just now going to run our own race. So obviously Tribe got into Sandbox. Like I mentioned, we started in September. I'll be honest, because it's such a unique program, we didn't know what to expect. It felt a little bit like, is this like going back to university, or is it like going back to school? What is it going to be like? That unknown, I guess, was real. And it wasn't like going back to school because after a summer holiday or Christmas holiday break, because you know what to expect. This was completely unknown, and everything was everything that we perhaps expected on a negative side of things was completely blown out of the water in probably the first 5 minutes with the quick introduction. I forget what it's called now.
The Pechakucha.
Yeah. If you haven't done one, try one. I think it's really good. And it broke down all the barriers and made everybody kind of open up to each other very quickly. From your perspective, how did Tribe benefit from, that initial phase of the program?
So thank you.
You're welcome.
It's been 7 cohorts. We're actively scouting for our 8th cohort, and again, there's 2 cohorts a year to get to this point. So it's not like, again, it happened overnight. It's very, very hard and diligent work from the team, looking at what's working well, what isn't, and constantly iterating and seeking to improve. That has made it what it is. and it will evolve. You know, when we get to our 9th, 11th, 15th cohort, I'm sure it will be a different product, much like Tribe potentially. Reading between the lines, I'm glad to hear that you think it was worth it. In terms of where I think Tribe excelled in that first due diligence phase, where we're getting to know you, you're getting to know us, and you know, we're evaluating the investment potential and opportunity in the business, is perhaps as a leader, as a CEO, or as a group, as co-founders, you all made the deliberate decision for the next 8 weeks, we're turning up. We're turning up, we're trusting this process, we're going to be there, be present, and we're going to really squeeze the juice out of this fruit, this metaphorical fruit, as much as we can. And the indirect consequence of that was that we could get to know you on a personal level, and you not just yourself, but your co-founders, in much more depth than if you had just perhaps attended 5 or 10 or 15% of what was offered.
Yep.
And it's not only the evaluation of the legals and the finances and the accounts and the governance that we were evaluating, but it's deliberately structured in an 8-week capacity such that we can evaluate who we're ultimately dealing with and potentially doing business with. And a bit of a fact of the day is like an average successful startup and VC relationship is longer than the average marriage. So, you know, it's not a matter of like, hey, cool, legals, legals are good, accounts are good, governance is good, let's invest. Not at all. You know, ultimately, there's much more at play than just signing a term sheet, and there's much more support that can be offered from investors, as we discussed off camera. So when startups are evaluating, or when VCs are evaluating startups, it's not a one-way street.
Yeah.
It's a two-way street. And
100%.
And I think you guys were transparent, you were forthcoming, you knew your strengths, you knew your weaknesses, you knew your gaps, you had a plan as to how to fill those gaps, and it just created a fairly strong level of conviction that, like, cool, we don't know what Tribe is going to look like in 6 months or 12 months, but do we back the people who are building what they're building? Yes.
You're absolutely right, number one, in that it's a two-way street, and I think a lot of founders often forget that fact, and it is a fact, because like you said, if you marry the wrong person, guess what? You get divorced, and it's ugly and it's messy. And if you invest in the wrong business, or you take investment from the wrong investor, guess what? It probably fails, and it ends messy and with a lot of disappointment and frustration. So having the opportunity to get to know yourself and the rest of the team was as important for us, perhaps, as it was for you. But I do think that's something that a lot of founders fail to recognize, because they feel like they have to be the ones to impress the other side of the table, as opposed to building a genuine relationship based on mutual trust, mutual respect, and mutual ambition, right? Because you also want investors that back the ambition that you have, not, play it too safe, right? There's other types or ways of investing in that respect. So, we took it as an opportunity to really get to know you guys. And quite frankly, I think we just had a lot of fun along the way. But the other point I wanted to mention is, the business model, the financial model, a lot of the thinking that we went into Sandbox with, we didn't leave Sandbox with, right? We had the opportunity to meet with great people, whether it's Ian from a growth marketing perspective, or, some of the pitch teardowns, or whatever it might have been. We were able to be challenged on our storytelling, our narrative, but also then, actually just, like you say, fill some of those gaps. And every startup, certainly at pre-seed stage, is probably going to have more gaps than it has, plugged those holes.
Sure.
And it was a really unique opportunity for us to kind of, a little bit like going to university, a little bit like stepping away from the day-to-day madness of wherever you're working from, coffee shop, office, home, whatever it might be, and just think again, or rethink some of the assumptions that you'd made. So I think that was probably one of the major benefits, is having that kind of time and space to think differently, as well as being challenged by experts in their field, not just yourselves. So that was super valuable for us.
That's actually coincidentally a byproduct, right? That's not necessarily the intent.
No.
But I'm glad to hear that it gave you the headspace and time to challenge and critique oneself. And as you mentioned the word challenge, I just finished writing down the word challenge, because the whole process is about challenging our thesis on should we invest, and our risk appetite, and evaluating risk for a startup A versus startup B. But it's also on challenging founders on their own understanding of the landscape, the competition, their product roadmap, etc. And if a startup didn't necessarily pass that first phase of due diligence, then they hopefully left having leveled up on a handful of those variables that you alluded to, but also leveled up on their investment readiness and their investment awareness, so that if it's not necessarily Oraseya Capital, then they've got better odds with other investors that might be in their pipeline or that they've been in discussion with, notably leaving with hopefully a much, much better, more coherent VDR, which is an often overlooked piece of the full fundraising cycle, if you will.
Yeah. No, I agree. Ultimately, my view is if you left Sandbox with or without investment, the value that you left with in terms of your data room, your assumptions or hypotheses being challenged, your products being reviewed, your marketing being reviewed, you can't leave with less than what you entered with. And if you did, then you're going to fail, right? So, but we met all of the phase 1 members, obviously those that got invested phase 2, they're all brilliant minds, brilliant businesses, and you can see how all of those businesses were developing in real time, and that was quite a nice thing to watch.
Cool.
From a founder to founder perspective. So I'll ask you a double-edged question here, where with a view to investing. I mean, I'm guessing you ultimately take the 20 or so startups into the program with a view to investing in all of them, but knowing that you ultimately or most likely won't invest in all of them. For Tribe specifically, what were you looking at in terms of what were you underwriting from a risk perspective? Was it the market? Was it the business model? Was it the people? What were the biggest risk mitigants, if you will, from an early stage, pre-revenue, pre-licensed startup? And I guess it kind of couples with the question of what were the greatest signals that really mattered to Oraseya?
So if I had to choose between market model and people,
yeah.
I wouldn't be able to, because it's not an isolated siloed decision, right? It's a comprehensive decision with many variables factored in. But if you're building into a shrinking market, that's probably, from a macro perspective, completely out of your control. Probably a no-go. But you're not. So that was good. If you look at the model, again, we've discussed that. It's on paper, it makes sense. You can buy fractionalized shares and stocks for cents on the dollar. Why can't you necessarily access the apartment or the villa in your community in the same capacity? So on paper, that makes sense. And then thirdly, the people, second time or not first time founders, diverse skill set, recognizing where you have such great strengths as a CEO and leader, and also where you've complemented them deliberately with people that you trust and clearly have expertise in said domain. It's a good recipe. I don't want to say a recipe for success, because I don't want to jinx it, right? We don't know what the weather's going to do next week. But there's decent amount of conviction that the market is growing, the model is applicable and timely, and the people navigating that storm that is inevitable. And I want to make this point, really emphasize this point. It's not just a matter of if you face and weather a storm, it's when and how you weather that storm, and potentially how many storms was high enough for us to go, this is worth digging into. The other thing that was a bit of a risk mitigant, particularly in the early stages that you were in, was your disciplined and professional and timely approach to Vara. Now, we have no affiliation to Vara, and if you are able to navigate a regulatory landscape like that in such a professional manner that perhaps funded, more mature businesses are struggling with, then it says a lot reading between the lines.
Yep.
And so whilst you didn't necessarily have the full VARA license at that stage, the indicators of the appetite from VARA, who could perhaps have easily said, no, this is not going to fly, but, absolutely did the opposite, was a very strong indicator to us that actually the people who are navigating a very, very difficult regulated challenge and landscape are doing so in a diligent, comprehensive, professional manner that is perhaps far above their years, if you will.
Yeah, and I think that's I think many people have said that a similar thing, and we're grateful, and we're going to continue punching above our weight for as long as we can. So in phase 1, let's even go back from that. So cohort 7, you had probably over 1,000 applicants.
Yes, correct.
You then whittled that down to 20 startups that entered the sandbox program in September, and I think 8 got investment.
That's correct.
So from 1,000 down to 20 down to 8, what could have been the difference for Tribe? Let's just keep using Tribe because I don't want to talk about any of the other startups. But what could have been the difference for Tribe in not making the cut and not getting that investment from Oraseya?
I think if your cap table was heavily diluted too early, it would have been a deal breaker.
Yeah.
We could like you, your team, your product, your product roadmap in your case, the way you're navigating the regulatory compliance, your initial perhaps waiting list or any form of traction, but then we can get to your cap table and it can be a showstopper. Thankfully, in your case, it wasn't. A second would be burn rate. If it turns out that your burn is super high and yet your pre-product, your pre-revenue, if you will, and you're burning a lot, perhaps on salaries or things that aren't necessarily moving the needle, and as a result your runway is limited down to weeks or a few months, it probably would have been a showstopper. In your case, that wasn't the case. And then thirdly would have been the VARA, the VARA appetite. Had VARA kind of not necessarily been as impressed as they have continued to be, and that's earned, right? You've earned that. You don't. It's not presented to you on a silver platter. Then it would have been probably different. But in your case, the way you navigated that, as I alluded to, showcase positive indicators.
And so linking then to Oraseya's decision to invest in Tribe, and just to kind of help the listeners or viewers understand the culmination of 8 weeks-ish of work from phase 1 of the Sandbox program, it's not a demo day, but more of an IC pitch with 3 investment committee members from Oraseya, 2 of whom are from Diaz, if I'm not mistaken. Yeah. And actually 2 of the 3 members of the IC you almost don't spend any time with. So it is a bit of an independent, more neutral view than what you would have, because we've seen you every 2 or 3 days a week for 8 weeks. So there was a sense of a heightened sense of pressure or unknown.
I'm glad
to the process. And yeah, like you said, whether it was a Tuesday or a Wednesday, or depending on what time, and all of these variables. But yeah, we got through. We're obviously super proud to receive that investment. Am I right in kind of saying that the regulatory tailwinds and the regulatory kind of, not endorsement because we didn't have an endorsement, but we had the approval to incorporate. We were well on our way through the process of getting our in principle approval. Mm-hmm. And you've mentioned the people. Were there any other deciding factors in the IC's decision to invest?
Look,
that I've missed?
Early stage, particularly pre-seed and seed, it's still quite scrappy. Not just with Tribe, but with many startups. Yeah. The behind the scenes are still quite scrappy. We recognize that.
Yeah.
Things start, and processes and systems start to formalize, and structures start to be built once there's some predictability to a business. But as you're building the plane as it's flying, and you're iterating and you're hypothesizing, and then you're finding that your hypothesis changes and you were wrong and you need to change and pivot, you are placing a lot, roughly 70%, maybe more, depends on the VC, sometimes less, of the decision on the capabilities of the captains of the ship, if you will. And that's the case with Tribe, because it wasn't a solo founder. It was a diverse team from with prior experience working together in relationships and proven successes in the past, and domain expertise in different areas that, the sum of the individuals is greater than the number of the individuals itself, if you will.
Yeah. Okay. No, that makes sense. I think just picking up on one point there, you mentioned that, you understand and appreciate and actually value investing in early stage scrappy businesses that haven't actually got it all figured out. And by all, probably, the vast majority of the obstacles are still ahead. All of the storms have yet to be weathered. How did Oraseya get to that point of comfort with that? Because it is, in my view, quite unique in Dubai still.
So, independent of Dubai, because we are a fundamentalist VC, and if there's hype, then we don't jump on that hype. If there's FOMO, we tend not to jump on that FOMO. We do our due diligence. We like to make sure that we've really evaluated every nook and cranny of said business in front of us, whether it's Tribe or another startup, and whether that's a pre-seed all the way through to Series B. In fact, Series A and B, arguably the odds are much, the risk is perhaps a little bit higher because we're dealing with such bigger checks. And so ultimately, we will never have 100% conviction. VC itself is an outlier model.
Yeah.
The LPs in VC, the limited partners, command and demand outlier returns. Otherwise, you can just put your money into commodities or into the market or property, perhaps. And so as a result of that, we're looking for outlier opportunities, outlier potential, getting in early and doubling down for the 7 to 10 year journey that this may be. And so we didn't have 100% conviction in Tribe. I don't think we've ever had 100% conviction in any startup we've invested in. But we had enough conviction to warrant, let's get in early and see how this unfolds. And since we've invested till now, the progress and the growth velocity has already been very, very positive. I don't want to say monumental, but it's heading in the right direction. So hopefully we got it right. And then, then we can start to look at doubling down and really cementing our position or growing our position on the cap table if the opportunity presents itself.
Do you think that Dubai needs more sandboxes, like sandbox programs like Oraseya's?
I think the risk appetite for pre-seed and seed investment is low. As in the volume of VCs and large angel syndicates possibly investing at pre-seed and seed is perhaps lower than it could be, lower than our counterparts in other geographies around the world. And I can understand why. Because property, particularly oil, and the stock market have been so predictable and back-tested and reliable that family offices and other sovereign wealth funds are happy to, and have been, fairly predictably putting their money there for a long time. So it makes no sense to necessarily rock the boat. But if someone is looking for that outlier return, then they have to be prepared to take that early stage risk.
Yeah.
And at Oraseya, that's what we endeavored to do. We made 25 investments in 2025. We made 24 investments in 2024, as I alluded to. Probably 60 to 70% of those deals were at the early stage.
Yeah.
Smaller checks, albeit, but we have to, in order for us to be able to double down into the winners at Series A and B, we have to be getting in early in pre-seed and seed. Also, the VC model is such that there are a lot of VC funded startups around the world that don't make it. They don't return anything.
Of course.
And so if the risk appetite of an investor is to put capital in with a expectation and a almost a predictable outcome, then VC is not for them.
Yeah.
If they recognize, actually, I'm not going to invest in one startup, I'm going to build a portfolio, I'm going to manage that portfolio and understand the risk involved associated to managing a portfolio and deploying into a portfolio of, say, 30, 50, 100 startups, then they've got better odds.
Yeah.
Do I think there can be more more funds like Oraseya? Sure, it's never going to be a bad thing. We're actively investing with all of the main names in the VC landscape, not just in the UAE but around the region, and it's good to see more and more creep up as well.
Yeah. I think the reason for my question is we're a member of Dubai Founders HQ, which is just literally over the road here in the 25H hotel. And there's a huge desire from, the government, from a top-down approach to drive innovation, to drive the startup ecosystem. But equally, that's met with a huge desire by a huge number of people to start ventures, right? Typically technology ventures, even more so in AI in recent times. And you mentioned kind of hype cycles and whatnot. But in order for those ventures to either get off the ground or continue flying, capital is typically required. And the program we went through with Sandbox or Oraseya gave you the insights over a prolonged period of time that didn't make due diligence feel like due diligence, because oftentimes the due diligence process is like many other processes here in Dubai. And I think people that are listening from Dubai and have been in Dubai will understand when I say this, in that the process lacks the very essence of the word, meaning no clear beginning, no clear middle, and no clear end. Right? There might be 15 steps, but you learn step by step, whether it's forward, left, right, back, up, down, and you're juggling, you're dancing, you're doing everything. With the Sandbox program, it was very clear. You've got 8 weeks, you've got to get this done, you've got to meet this person, you've got to get this report done. And there's no guarantee at the end that you'll get investment. You will be better off for it as an investable business. And I guess the point I'm making is that if you walk into Dubai Founders HQ now, it's absolutely packed. And that's one campus. It's not a small campus, but one campus in the grand scheme of Dubai, with hundreds of founders and hundreds of ventures that are being built, but only one Oraseya, right? And I'm not saying that to blow smoke up of your, backside, but more to the point that I just think we need more of what you guys are doing if we're going to grow the ecosystem as quickly and as efficiently as we possibly could. Otherwise, it's then a game of survival of the fittest, as opposed to those that can innovate the most or whatever. And I think that's where Dubai still has a little bit of a way to go. And the whole point of sharing this journey is to say that building a business is not easy. It's not quick. It's not cheap. And raising capital is also one of the hardest things you can possibly do here. And whilst the founders and the startups have to do everything on their side, I think the ecosystem and the venture space also needs to unlock different ways of moving the needle a little bit quicker. Do you disagree? Do you agree? What's your...
Do I agree or disagree? More capital is never a bad thing. More access to capital, particularly at the early stages for startups, is never a bad thing. But there's a difference to just having capital freely available and money growing on trees than making it difficult to attain. In that, founders need to know what venture commands and the business model of venture. And I think that we spend a good amount of time for free on a pro bono basis, upskilling founders, welcoming them to our office, often multiple times a week, just to help them recognize what it means to raise venture and the expectations and journey that they're kind of setting foot on. So if capital was widely available and everyone had it, I don't think that would be the solution.
Just to be clear, I'm not saying the market should be flooded with capital. What I'm saying is exactly actually what you've just said. You've just said it way better than I was able to, in that there's often a disconnect from the very beginning in terms of understanding each other's expectations, right? And the thing that Oraseya have done very well is deployed information to founders to help them on their journey which may or may not involve raising capital, but for most of the venture builders, it will require raising capital at some point. And by bridging that delta early on, conversations are made way easier. Like, I'm grateful from the program because the conversations I now have with other VCs are more efficient. We're connected way earlier. And why I'm saying I think there's more Oraseyas are required, because you guys can only take on 20 startups per cohort, right? There's a capacity that you have, but actually hundreds of startups need that knowledge, need that guidance to get themselves ready to raise capital. I'm not even talking about raising capital itself. I'm saying that readiness aspect. And that's why I think there's still a gap in the market to be filled that you guys have absolutely paved the way for others. A bit like, the first tokenized real estate platform paved the way for us. I think you guys have definitely done the same.
Cool. No, I'm grateful to hear that. And we endeavor to make great investment decisions based upon the opportunities that are presented to us, and that's why we remain sector agnostic. And if our efforts help founders, whether we invest or not, and or help inspire VCs that are either in the region or expanding into the region, then that's only a benefit. That's only a positive thing. Yeah. But again, it's sort of a byproduct of our efforts. Like we're looking for good opportunities at the end of the day. In just a couple of things that I was writing down as you were saying there. We're looking for quality over quantity. So 20 is a rough number for each cohort. It could be more, it could be less. And this prolonged period of time for fundraising and the ambiguity around it, not just here, but around the world, is something that we want to kind of, really make a thing of the past.
Yeah.
And so that's why Sandbox in its capacity is very transparent. It's fast. And it's very clear on what the expectations are at the beginning, the middle, the end, and thereafter. And I would like to think that we are, from the start of joining the program to your investment committee decision, perhaps one of the most transparent and one of the quickest institutional VCs around. And if that can encourage other VCs to also, at least outline their process or their timelines for the startups, then it can be beneficial to all.
Yep.
The other thing is the preparedness. So you alluded to some of the insights that you picked up from Sandbox and from your time with us as part of our portfolio now, that help you make your future conversations with VCs more efficient, more effective. But ultimately, I would put that down to, like, you are more prepared, you are a more investment ready founder.
Yep.
You know how to approach the process, the expectations of the process far better than perhaps before. And that's a testament to you. Like, we can take you so far in terms of knowledge and insight, and like what happens behind the scenes, and we actively share that with our portfolio founders, but also with members of the startup ecosystem that we haven't invested in yet. But as a founder or a founding team, it's really up to you guys to implement some of said knowledge or insights. And I think what Tribe do quite well is you are actively constantly expanding your network, not out of a desire to have more people in your network, but your pursuit and for knowledge and wisdom and curiosity for learning and access is that fire continues to burn, like, extremely strongly.
Certainly does.
And the conversion from acquiring that network and that knowledge to implementing and accessing and applying some of that knowledge and network is very high. And I see that being a very good trait of yours, that is very calculated, very deliberate. Some information you'll deliberately not act on, but you've made that deliberate, thoughtful choice not to. And much information, you were intentional about finding it, you received it, you then implement and action within days or weeks. And that deliberate nature of how you're approaching what you're building is also, a testament to your readiness. It doesn't just happen. It doesn't just happen overnight. It happens from, your efforts as well.
No, absolutely. I think one other point just to draw on there around connectivity, in that, again, one of the hardest things for founders to navigate here in Dubai is who to speak to, who to speak to, how to find them, how to approach them, how to then open the conversation. And one of the great things and actually unexpected benefits of the Sandbox program was the investor roundtables or breakfast. I can't remember what they were called exactly, but you would bring in managing partners or partners from different funds, and they would have an open conversation, not just about the fund, but about themselves, their backgrounds, their families, their hobbies, or whatever. And it was like a neutralizing effect that made it a free flow. And these conversations were sometimes going for nearly 2 hours, which I think is a testament to one, the caliber of the guest who was speaking, the partner or managing partner of whatever fund, but two, how you had enabled that conversation to just naturally and organically flow because everybody felt like they deserved to be there and felt comfortable to ask, frankly, any question.
Sure.
Which I think is a huge benefit to us and to others who've gone on to have multiple, subsequent conversations with those VCs or those funds or those partners. So I think that was really good. So sticking on Dubai for a little bit before we kind of wrap up. Why is Dubai uniquely positioned for a business like what we're building here with Tribe? And I think critically, again, from a radical transparency perspective, where does it still fall short?
So Dubai is a great place for Tribe today, I believe, and arguably the UAE more broadly, because
I would agree.
The fundamentals of the UAE and what it's achieved in the matter of 2 to 3 decades is
ridiculous.
It's fast, right? It's rapid. I don't think I've
That's why we love it.
or experienced anything like that anywhere in the world. And I can say that with lived experience. I moved here in 2002. And so it's a pleasure to still be here as a professional contributing back to the startup economy in the capacity that has unfolded. And over the past 3 decades, what we've seen is the rate of infrastructure being deployed, the number of schools, universities that are being set up and established, the amount of housing, the quality and volume of healthcare that is accessible to all of the residents here is unparalleled. And so Dubai and the UAE has done a really terrific job at making its vision a reality.
Yeah.
And often every sort of 5 to 10 years, there's a vision that is outlined. I mean, there's a Dubai D33 vision, which is not far away now. There's a Dubai 2040 vision, which is widely available for anyone to see online. And so you can sort of see where the direction of the city and also of the country and where it's heading and the intention. And so it's rare to have such long, multi-decade outlooks with a proven
record of achievement.
Proven record of achievement, exactly. Took the words out of my mouth. Inevitably, there's going to be growth pains when you are scaling a city or a country so quickly. You're becoming such a magnet. And those growth pains are to be expected. Going back to your earlier question, could there be room for more Oraseyas in the ecosystem? Perhaps so, according to your opinion. But that doesn't mean it's not going to happen.
Yeah.
It might happen. It probably will happen. If you look at the growth velocity and the indicators of where things are heading, I imagine there will be more Oraseya Capitals in 3 to 5 years. 3 to 5 years in the grand scheme of venture is not very long.
Yeah.
So, that's why I think Dubai is a really great place for Tribe at the moment.
No, I agree. We wouldn't build it anywhere else. Again, from a regulation perspective, it's incredible. Going through the VARA process has not just been rigorous because it has to be, but it should be. And the people that have guided us through it, both from VARA's side and any other kind of advisory side, has also been, world class. Like genuinely great people, incredibly intelligent, incredibly knowledgeable. I think that goes across different sectors, right? You meet so many great people here. Like you said, from a connectivity perspective, you can learn so much so quickly purely by having a coffee. And I went to another kind of networking event last night, and people were saying the same thing, is that it's very rare when someone will say no to a coffee. Yet back in England or other places around the world, it's very hard to get people to commit to doing anything in person. I'd say where it falls short, and you dodged that part of the question very nicely, so I'll answer it for you.
Growing pains.
That was broad strokes. I'll give you some examples. Company setup here took way longer, and we had to go through way more different, several different authorities, different economic zones, if you will. I think there's a big opportunity still for that to be more efficient, cheaper, right? When I started my first company in the UK in 2009, I set it up online. One evening in 20 minutes, it cost £25, and I got a bank account with it instantly. That was 2009. Here, we still don't get that speed of company incorporation, bank account opening. And I get why. Obviously, we're building a fully regulated business with, pretty intense KYC ourselves. But we're now onboarding customers into the Tribe app when we go live in seconds, maybe 1 to 2 minutes, right? I'm quite confident that companies can be set up and bank accounts can be opened for companies in that kind of time. WeO Bank have done an incredible job. They're innovating, fantastic. But I think there's still a way to go to allow that speed of innovation. Because if you don't have a bank account, you can't operate. So I think that's been a big obstacle that I've written about quite a lot. People have heard me vent about it a lot, and I would love to contribute to fixing it. I think that's more importantly the point. It's not just criticizing it; it's saying this is where it's not currently working. This is how we can do it better. Let's all help to contribute if and
So perhaps
where we
the future of Tribe is a neobank.
We'll say no more on the matter. Let's see. Maybe that's your prediction. Okay, just wrapping up.
I also just want to add there, like, Dubai's a great place, or the UAE is a great place because there's 190 plus nationalities.
Yep.
So it's a great place to test things.
Yep.
You don't know if your product, whatever you're building, is going to land with the upper class Indian population, the middle class American population, the middle class Japanese population, but they're all here.
Yeah.
And so you can test that. And then once you have some form of indication that there is traction with said ICP, said ideal customer profile, you can then double down into that geography or expand that with deliberate intent. That's a massive game.
Yeah, I think that's a great point.
The diversity of people here, cultures, backgrounds, ethnicities, is also a melting pot for opportunity. But I think people just want to win.
Yeah.
Whatever they're doing here, they want to win. They're willing to work hard. They're willing to get that coffee because they recognize that it could unlock another door that helps them, whatever it may be. And maybe not, but at least they're trying. And I feel like there's a very strong macro winning mentality in the UAE, which
100%.
which is blossomed from a grassroots level, but also comes from the vision of the leadership. So, they're very complementary.
Yeah. And even little things like you can have a coffee with someone on a Wednesday at 8 p.m. because the coffee shops are still open and the malls are still open. And like that winning mentality comes from the top down. Absolutely. But like you say, it's also met from the bottom up. Like people want to continue working, will meet for a meeting at a weekend or go for a coffee at an evening, or go to a networking event that they weren't quite sure about, but then left. Oh, I'm glad I did it. So no, I completely agree with you. That mentality that is here is in very few places elsewhere around the world. So yeah, we're very grateful, and again, great to be surrounded by kind of so many like-minded people. So as we begin to wrap up this unbelievable conversation, what advice would you give to founders, early stage founders raising capital, whether that's from Oraseya or angels or anywhere, critically before the metrics or the traction of the business, whether you want to call it product market fit, is obvious. So for businesses like Tribe, where we were pre-licensed, pre-revenue, pre-product launch, pre-go-to-market, pretty much everything, what advice would you give specifically to those founders?
The biggest skill set you can enhance and hone in on at any stage, particularly idea stage or pre-MVP or pre-traction stage, is storytelling. The ability to own the attention of an audience, narrate one's vision, and take said audience, in this case investors, on that journey so that they can imagine being there alongside you, is something that will will help you for life, if you will. And you'll always lean upon that. So that would be a really important one. On that note, I see a lot of early stage founders assuming that I've worked with them at the hip for 3 or 4 years when I've just met them 4 minutes ago.
Yeah.
And so they're taking me into such deep technical details of their product with the assumption that I know the macroeconomic environment, that I know their niche within the competitive landscape, and I don't. And so I would urge founders to really start high level and think and basically gently guide the audience or the investor to the solution and then to the product. On that note, I see a lot of founders love and obsess and become very emotive over their product. I would urge founders to love and obsess and become world-class domain experts in their problem domain. By doing that, their problem domain is going to help them influence understanding the problem domain is going to help influence every decision they make pertaining to hiring, firing, fundraising, product development, expansion, legals, governance, IP. And if they love and obsess over their problem domain, they become sort of agnostic to their hypothesis, which is their solution, their lens on how they solve the problem. And then really completely agnostic to their product, because their product is going to evolve today, tomorrow, next week. Then it's going to be they're going to be able to make iterations much quicker. Basically flipping it on the head. I see a lot of founders love and obsess over the product and a little bit nonchalant about the problem, and then the solution, their lens on the problem sits somewhere in the middle. I would suggest flipping where that love, emotion, and domain expertise is into the problem. I'd also consider founder market fit, which is an interesting one. Like, if you are building a fintech, have you any financial or accounting or banking experience in the past?
Yep.
And if you haven't, that's not a problem necessarily. Have you got great people on board, advisors, mentors, co-founders, colleagues, senior leadership who can plug those gaps? Founder market fit is a big one. And then I would, another piece of advice I would give is just professionalism. Early stage investment is about conviction. And if we haven't got 6 or 12 months of backdated recurring revenue and phenomenal growth rates month on month, and waiting lists and retention increasing, attrition decreasing, CAC decreasing, all of these things, then what we do have to evaluate is the person or people in front of us. And one's demeanor, professionalism, charisma, forthcomingness, willingness to showcase one's strengths, willingness to recognize where one falls short, his or her coachability, trustworthiness, transparency can be evaluated. And those are things that I would urge founders to recognize are being assessed, if not more than the problem statement and the solution and the product at the early stages, then at least equal to. And that would be some advice that I would say founders overlook.
I hope all of the listeners have gotten to this point, because that's unbelievable advice. So thank you. And then, what would you say are the key benefits other than capital? Because as we mentioned, not everybody gets to that point through the Sandbox program. But if anyone is at this point and they're listening and they're thinking about applying to Sandbox, what are the non-obvious benefits, if you will, or the secondary benefits?
So capital is clearly the first one. But the carrot at the end of the stick isn't the first check. With Oraseya Capital, we have the ability to reinvest and double down and support from pre-seed to your seed, to your pre-A, to your A, to your pre-B. Maybe you do a bridge and then your B, in theory. Of course, we would evaluate the opportunity at each milestone. beyond that, network is, as you can recognize, is arguably your network is your net worth, and the access that a VC like Oraseya or otherwise can give you is really, really important to factor in. Also, knowledge. Are the VCs domain experts in your industry? Possibly so, if they're industry specific. Perhaps not if they're sector agnostic. But maybe they have access to people who can also help guide you in domain expertise concerns, or more generalistic concerns like fundraising, like communication, like strategy and growth and expansion and things. The other thing I would say is the portfolio, the broader portfolio. If a VC has an existing portfolio of founders, and a founder is seeking to apply to said VC for fundraising, it's probably worthwhile him or her doing their due diligence by speaking to a couple of those portfolio founders, those existing portfolio founders, and getting their opinion.
Yep.
What are the pros? What are the cons? What are the benefits? Where is the value? And the larger the portfolio, arguably, the larger the network of existing founders that new founders can access.
Yeah.
And then perks. VCs often have a load of perks and partnerships with credit providers and various software houses around the world, for which startups could, really benefit from and avail. That would be it. But in summary, you want to be working as a founder, but also as a VC. And ironically, there seems to be such a divide, but actually both people want compatibility with one another, that you can call in the good times and hear about the successes, the accolades and the milestones. But more importantly, that you could call in the bad times.
Yeah.
And have a grounded sense of wisdom, a grounded sense of guidance, at the very least a listening ear, if not some form of potential solution to that difficulty. Because as I've said earlier, it's not a matter of if, it's a matter of when that storm is weathered, and probably multiple storms.
Yeah, I have no doubt, and experience tells me that that's absolutely the case. For me, one of the biggest and unexpected, I don't know why it was unexpected, but benefits of the Oraseya Capital Sandbox program was meeting other founders, both from the cohort we were in, but also previous cohorts, and then ultimately going on to do business together. So we're working with Prop AI, for example, one of the previous cohorts.
Great.
And integrating that into not just our customer-facing app, but also our asset selection process. So a significant impact on the business, but also the meeting of great minds in the sense of, Raneem and the team at Prop AI are brilliant people, and it's always a pleasure to work with other brilliant people. Same with the guys from CapQuest for cap table management. And these are all things that, would have been on the horizon, but kind of way further down the road. But it got accelerated because we got to meet those people so quickly and get to know them, I guess on a more intimate basis, particularly on a business level, than what you would have done otherwise. So I think that was definitely the biggest non-obvious benefit of joining the program.
Great. Delighted to hear that.
And so, as we conclude today's episode on capital and conviction at such an early stage, you've mentioned there's a number of storms ahead. So thank you for that. We look forward to the choppy waters that lie ahead. But we're building this in public. We've made that commitment from day one. You mentioned around storytelling. We call it building in public, but ultimately it's just being honest, right? Honest that, like you say, not everything always goes to plan, or indeed very rarely does it go to plan or on time. That you have to be adaptable. We will make some great hires. We will make some shit ones. There will be some difficult conversations. Capital raising will be a constant theme throughout as we grow and as we grow and as we grow. So, that's why we're here today, to continue that layer, or actually build on that layer of transparency. And so I would like for you to look ahead through those choppy waters, perhaps into the light of at the end of a tunnel, for Tribe. And what does the road ahead look like in your view for Tribe, in the market we're in, the time that we're in, the position we're in as a pre-seed to seed stage business, a pre-IPA to operationally live regulated entity, a technology business at our absolute core. And importantly, as you've mentioned, we are building a real estate investment platform that enables more people to access better investment grade assets that are more liquid. With all of that said, what lies ahead? Could you give me what you think one opportunity for Tribe is and one obstacle?
I could. I shall try. I'll summarize it with the ambition that I don't know. I'll caveat it first of all with I don't know how long this might be. It could be 2-3 years. It could be 5 years, and it could be longer. Hopefully sooner. With the anticipation and hope that Tribe becomes a relative household name in the region. If not in the region, then hopefully internationally.
Hope so.
And that would be a really great eureka milestone. It wouldn't necessarily be an accolade that can be identified with number of website visits or how many people are investing and the amount of capital that's coming in each month and the number of properties that you're onboarding, etc. That can all be tracked. But just speaking to a random person on the street or in the mall or at an event and be like, oh, you use Tribe? Yeah, I use Tribe. I've heard of that. I think that will be really cool. And I look forward to that materializing. As we say, inshallah. The interesting opportunity is that you have an opportunity to create for Tribe is creating a win-win-win scenario, and possibly a win-win-win-win scenario. A win for the retail investors who previously haven't had access to this asset class in such an accessible manner, and hopefully them being able to be paid out and yield growth. The second is a win for the landlords or the property owners, being able to make returns in a different capacity to short-term rentals, long-term rentals, or otherwise. The third win is to your stakeholders and investors on board to Tribe, like Oraseya Capital and others. And by being in a position to create wins for multiple stakeholders, you're creating likability, you're creating trust, you're creating stickiness. And so that's a great opportunity. In terms of the road ahead and some challenges, I anticipate you'll have to kiss a few frogs, whether that's hiring someone or people that you think are great and it doesn't work out. That would be probably inevitable, but you're mindful of it. And I think you've done that in the past ventures that you've run as well. I think you want to be thinking about ensuring you can get to a level of or close to profitability as soon as possible. That financial diligence and how regimented you are around cash in, cash out will say a lot to the broader market, particularly assisting or hindering your future fundraising efforts, I would say.
Very good. Well, we're going to look back at this in 6, 12, 18, 24 months' time, and hopefully some of your predictions have come correct. Alistair, certainly our CMO and co-founder, will be delighted to hear your future vision of Tribe being a household brand name. And that's definitely a shared vision. We've invested time, care, more than anything, and depth of thought into the brand from day one. And we continue to. That will never stop. So brand is definitely one of the moats that we want to build. So I certainly hope that comes true. And I don't disagree with anything you've just said. From a discipline perspective, we're very lucky. We have the likes of Dennis from a finance side of the spectrum. Benoit, who's recently joined us on head of compliance. Overseen by Seb, who's as black and white and blunt as the day is long. So we have all of those kind of guardrails in place, and ultimately now it's just keep pushing and let's see where we get to. Elliott, the fact that you're here and have agreed to come and sit down and do this is a testament both to you and your character and Oraseya. And Oraseya is both a venture capital investor, a community, an ecosystem builder and enabler. So thank you, first of all, for joining us. It was a real pleasure to go through the Sandbox program. It's a pleasure to now have Oraseya on the cap table, and obviously The support we've had from yourself, from Goose, from Omar, from Julian has been phenomenal from day one. And again, we don't know where it's going to go. And I think, you've been very clear in that, nothing is certain. And we really do appreciate and respect that transparency and that honesty that Oraseya give, not just to us, but to all of the members of the various cohorts and even the applicants that don't even make it, frankly. So thank you very much for joining us here on Block by Block. And we look forward to having you or one of the other members of the team back in the future.
Excellent. Thanks for having me.